In fact, let me welcome on board Naresh Mirani as well and try and understand the technical construct of the market right now. Naresh, hi, afternoon. One didn't quite see this kind of a sell-off or the weakness in the market to intensify like this. But this late hour selling, what is that? What is that telling you? We're down a good 300 points on the index alone.
So we continue to face this selling, and once the selling starts, it continues and looks like FIs are selling nonstop. And this has been the case for the last four sessions now. Till the time we don't start recovering in a meaningful manner, till the end of day, we would look at this selling as a continuation of FI selling and rejig happening. China opens on Tuesday. That could be another price point where we actually see a turn. For now, 24,800, 24,750, which was the swing low and the low in September, that should be an important support. Overall, the drift is lower, but I think we are getting closer to the support points at 25,000, just 200 points away from a major support.
Europe, though, has been a lot more stable, I must say. They've slightly moved up higher with the US jobs report in view. Musk, of course, has fallen about 7% but I can see the CAC hold up nearly about 0.5%. The FTSE MIB is up 250 points. DAX, though, is flat, but Stock 600 also trading with a marginal positive bias. Quick check on the US futures as well. Pretty flat as of now, but let's see. The street is still awaiting the September jobs report. The markets perhaps would react to that. The one, of course, wherein the bull trend, at least in the near term, seems to be intact is definitely crude, because now that's scaling around that $74.36 to a barrel. Actually, let's put all of this in perspective, all the developments around the globe, and what does it really imply for India? Who better than Mark Mobius, Chairman, Mobius Emerging Opportunities Fund, to talk about exactly that. Mark, hi, good afternoon. Welcome to ET Now once again. Not quite in the pink of health, Mark, unlike the color that you're wearing today, seems to be the state of world markets right now. I mean, it's almost a year now to the Israel-Hamas conflict, and now you've got Iran as the new counterpart. How are you assessing, firstly, the geopolitics at play around the world?
Well, first of all, as you know, the oil situation could get very dire, because if the Middle East situation escalates and attacks on Iran's oil sources take place by Israel, then you're going to see oil prices moving up. Generally speaking, the unstable situation in the Middle East means that we probably are going to see higher oil prices. The only way to solve that, of course, is for the U.S. to drill more. And if Trump gets in, then, of course, you're going to see an incredible increase in U.S. drilling and therefore some relief on the oil price. But that remains to be seen. The other thing that's happening, of course, is the stimulus package in China is pushing up the Chinese market very remarkably. And of course, that means that the emerging markets index is moving up, because China represents a significant, almost 30% of the index. When that happens, the combination of India and China moving up means that now the emerging markets are outperforming the US market. So China's move is actually going to help India, because more and more investors will be forced to buy emerging markets index. And that means India, not only China, but India. So India looks like it's in pretty good shape. However, with SEBI cracking down on derivatives, that's the reason why you're seeing some backtracking of the Indian market. I think that will probably continue for a while, but it won't be serious.
Of talking points and food for thought there, Mark, but let me pick up on the first point. The fear about oil getting back to 100. We've seen that previously as well, and that definitely doesn't spell good news for oil importing countries and economies, much like India and China both. You think the world can once again go back to that reset in oil, if at all the situation is to escalate and we were to get back to those 100 or even higher levels from right now?
I think we are going to go up on oil for a number of reasons. One, the problems of the Middle East. But more importantly, you must remember oil prices are denominated in US dollars. And the US dollar is getting worth less and less as a result of inflation, money printing in America. here again, the US election will mean a lot in this situation. If Trump gets in, you probably will see a strengthening of dollar and therefore some relief on the US dollar price of oil. But other than that, I think we're going to see higher oil prices in US dollar terms.
So let's talk about what you're penciling in when it comes to America and the elections there, because it's getting pretty close to call, and the event as well is much closer, just 2 months away.
Yes, exactly. It's it's all on pins and needles. We don't know what's going to happen.
Right. Good afternoon, Mark. This is Cheryl also joining in the conversation. And let's shift focus to what's happening in emerging markets. And emerging markets is a space that you've always been bullish on. But given the fact that over the last few weeks, we've seen actually the China stimulus blitz, if you could call it, in China, how do you think that that actually alters the way how you will allocate your funds to the emerging markets now?
Well, of course, I still will be favoring India and Taiwan. Of course, Taiwan benefits from an upturn in China because there's a lot of trade between Taiwan and China. In fact, some people consider, of course, Taiwan is part of China, but that remains to be seen. What we're going to see going forward, I believe, is a big increase in Chinese prices with some corrections along the way, because the Chinese government is determined to see the Chinese market move up. Therefore, they've allocated something like $30 billion in money for stock markets purchases. So that augurs well for not only China, but also for India, because as I said, 50% of all money going into emerging markets is index money. And as the index moves up, people have to buy not only China, but also India.
Exactly the point, because while China may be in a whatever it takes kind of moment, and perhaps this is not it, perhaps we will see more measures by way of stimulus. But that's the fact, right? Because Mark, here back home, the fear is that money is going to pull out of India, move into China. But if it's an index allocation, it may be a higher weightage for China, but it's not like you can skip India.
Definitely not. I mean, as I said, going forward in our portfolios, India will still be much bigger than China. Of course, we continue to look at China. We've looked at China even before this upturn, but we find that there are more bargains, more opportunities in India at this stage. Now that can change, of course.
Right. Mark, when you talk about your investment strategy, you've also been of the view that it makes sense to keep significant portion of your allocation in cash to be ready to actually deploy that when there is a volatility in the markets. Can we now say that this is the time that you should go ahead and allocate or deploy your more cash in the markets, given the fact that we are seeing volatile moves across the globe?
Oh, definitely. There's opportunities all over the place. And we've always been trying to be fully invested at all times because the world is big. There's lots of opportunities around, even when the general market is down. The index may be down, but there could be very good opportunities among companies that are not index stocks.
So, Mark, let's start off with the shopping list. What's it that you're buying when it comes to India? Because we too have seen a fair amount of ease off from the top and continue to see so even right now.
What we're doing now is looking more and more at the property stocks and also the infrastructure stocks. Those are the two that seem to be interesting. I can't give you names, but those are the sectors that we are looking at more closely.
Many believe that, the allocations, whenever they get upped for India and if FI participation comes back, which it did sporadically the last 2 months and then again sort of pulled back in the month of October because of the volatile global movements, that private banks, that as a segment in India has underperformed, and that's looking at as the most attractive bottom-up story. Would you also allocate some to private banks at all when it comes to India?
That's one area that we're looking at because the numbers look very attractive. Generally speaking, we are not excited about banks, not only in India, but globally, because there's a degree of problems with transparency and knowing what their loan book actually looks like. But as I said, some of these banks in India are beginning to look interesting.
Though, Mark, do you believe that amidst the world markets, China as a pool is going to outperform as opposed to even India or for that matter, US?
That remains to be seen. China, of course, has outperformed dramatically in the last few weeks, but we'll probably reach a turning point soon because it's moved up too far, too fast. So we'll probably see a correction. But India will continue its upward rise with some corrections along the way.
Mark, you've always been a long-term India bull. We've corrected just a wee bit from the top. We're still at 25,000 in the Nifty. But what are the targets that you're looking at before the year ends?
Probably 50 or more. Who knows? Not before the year end, but by next year.
Okay, that's great. So that's almost double of where we're sitting at. But other than, property and infrastructure, Mark, you've been a long-term India bull. What are the spaces where you think that not just fresh investment, but you would continue to buy more and more on declines?
Well, now, what you're going to see in India is the development of the chip industry. You're going to see a very rapid development of semiconductor production, and that means all of the infrastructure and all of the support for the development and design of chips. So what we're going to see is many, many opportunities to buy these companies. These are basically software companies. They call them fabless companies. They don't have fabs, they don't have factories, but they design. And of course, these companies are going to be coming up in India more and more.
Mark, last time when we had this conversation with you, you did mention that you're looking at the mining sector very closely with what's exactly happening in China, the way how the metals counters have moved over the last few trading sessions. Have you actually looked at them more closely and more deeper now, the mining sector?
Yes, mining is very, very interesting now because, commodity prices are moving up. If you look at copper has jumped up and a number of other commodities are looking good besides oil, of course. Generally speaking, we're not too excited about mining companies that actually do the mining, or companies that drill the oil. But we're more interested in the companies that supply the equipment for these industries. So in the case of mining, it would be heavy contracting equipment. In the case of oil, the oil servicing industries, these kinds of people, because their earnings tend to be more steady longer term.
So, Mark, if you had $100 to invest across asset classes and markets, how is it that you're going to divide that?
Equities are always the top. There's no question about that. A little in gold, 10% in gold, but all the rest in equities. From time to time, of course, when we have cash, we put them into short-term fixed income, but that's not something that we would hold for longer term.
I want a country-wise division, Mark, on how that 90% is going to be distributed across world market equities.
Well, it'd be at least 20-30% in India, 20-30% in Taiwan, maybe 10% in China, 10% in Korea. Then the rest scattered around Vietnam, Thailand, Indonesia, Malaysia, Turkey, and a little bit in Brazil.
How is it, Mark, that US has completely skipped your list?
What's that again?
No, I was wondering how US is not part of this 90% allocation at all.
US is there, but it's reflected in these countries. So, for example, there are a lot of stocks listed in the US that are actually Indian, Chinese, Malaysian, whatever stocks done in ADR form. Also, there's some stocks in the US that have an incredible exposure to emerging markets. So there will be some of those in the portfolio.
All right, then, Mark, we leave it there. And as always, you've been a long on India, always a big bull on India. And Nifty target of about 50,000 till next year is what you have mentioned. But I wanted to understand also your target for Sensex then, if 50,000 for Nifty by next year. Year-end target, do you have anything for Sensex?
Probably 100. I've made a prediction in the past, as you know, and we're not too far from that. So you're going to probably see much more upside.
Mark, always a pleasure having you on the show. Thank you so much. And do ping us when you're down in India next.
Yes, I look forward to it. Actually, I'll be in India the end of this month, I think. So maybe we can get together.
Oh yeah, absolutely. We must. We'll not leave that opportunity, and we'll have our team get in touch with you. Good speaking with you, and look forward to meeting you.
Thank you. All the best.
Thanks.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.